So the first thing that we're going to do in order to trade our FLD is we're going to choose a time frame. Now, the time frame that you're going to trade off will depend really on how much time you are willing to spend doing this. And that is because on the close of each bar, you are going to be considering making some trading decision. In other words, I am potentially going to be entering a trade, or I'm going to be adjusting my stops. If that's the kind of thing that you only want to be doing once a day, then of course you will be trading daily bars. If trading is something that you're doing full time, then you are going to choose a much shorter time frame, possibly 5 minutes or 15-minute time frame, because every 5 minutes or every 15 minutes you are going to be making some kind of a decision about each instrument that you trade. Of course, you might be trading more than one instrument, you probably are, and so that becomes a part of your consideration. As you start to get a feeling for trading the FLD, I think it will become fairly clear to you what your preferred time frame should be. And so let's assume that we have decided on the 15-minute time frame for the purposes of this video. So here we have the 15-minute time frame of the Nasdaq, and the first thing that we need to do is we need to identify our trading opportunity. As mentioned in the previous video, the trading opportunities start for us with the anticipation of a sequence cycle trough. The sequence cycle is, of course, the green cycle, and we anticipate the troughs by means of these nests of lows. Here you can see that a sequence cycle trough was anticipated. It was anticipated, if I'm reading this time correctly, at about 9 o'clock this morning. And the time is currently approaching about 1 p.m. Of course, the time on this chart is MT4 time. It is 1 hour ahead of Central European time, confusingly, and it is therefore 7 hours ahead of New York time. And of course, the Nasdaq is primarily traded during the New York session. And so what we're looking at here is considering a trading opportunity a couple of hours before the New York markets open. A fairly good time to be considering our trading opportunity as a matter of interest. And so our trading opportunity is initially identified by anticipating a sequence cycle trough, which you can see is exactly what is happening here on this chart. And so it is quite possible that over here is our sequence cycle trough. Here is the nest of lows, and it was expected about over here, and so it is quite reasonable to suppose that it might have formed over here just a couple of hours late. So our first trading opportunity, you will remember from our basics video, is of course when the A category interaction occurs between price and the FLD. So what do? Do we immediately set a stop entry order at the level of the FLD? Absolutely not. That is perhaps the first golden rule of this. Even though we are expecting price to cross above the FLD, notice the upward pointing arrows here, indicating that the FLD is expected to be a point of acceleration, and so price should cross up above the FLD and generate a target to the upside. Even though we are expecting that, we also know that the FLD can provide resistance. Note this bar over here. Can you see how the FLD provided perfect resistance at that point? Now, it is quite possible that at this time over here, we were thinking, oh, there is our sequence cycle trough. And if we had set our entry as a stop entry at the level of the FLD, we could potentially have been stopped into a trade here, which would have been a mistake. So we do not set our entries as stop entry levels at the level of the FLD. The FLD is a signal for us, but we have to wait for that signal. And so we have potentially identified a trading opportunity. Why? Because we have the expectation that a sequence cycle trough has formed in this market. We also have an A category interaction looming. It is quite possible that price is approaching that FLD, and so we are about to receive our signal. Is that all it takes in terms of assessing our trading opportunity? No, because what we should also do is consider longer time frames and consider what is the shape of the cycle that we are expecting here. So let's start with that shape. So the shape of the cycle depends, of course, on the longer cycles. The first way that we can consider the longer cycles in this chart is very simply by zooming out. So I simply hit the minus key on my keyboard and we have zoomed out. As an obsessive Hurst Cycles analyst, I'm already questioning the position of these troughs, but remember, the analysis is optimized for us to make sensible trading decisions. So I'm not worrying too much about what has happened in the past. What is of greater interest to me is, where is my yellow cycle? Here is my yellow cycle circle, and it is fairly obvious that I am now in my final sequence cycle within that yellow cycle. So that yellow cycle on our 15-minute chart is, of course, the 5-day cycle. That means that the 5-day cycle is expected to form a trough over here. The 2-day cycle, of course, formed this rather questionable trough over here, but the 2-day cycle trough is behind us. We witnessed a bearish shape out of our previous 1-day cycle, that is our sequence cycle. That was a bearish cycle, as I think you can see. What are we expecting out of our next 1-day cycle? We are expecting the next 1-day cycle, therefore, to be more bearish, aren't we? Because the final 1-day cycle within a 5-day cycle is expected to be more bearish. Does that mean that we should totally ignore this trading opportunity? In my opinion, no. But what we should bear in mind is that it might be a fairly short-lived trading opportunity. But we've chosen our time frame to catch these moments, and even if it's a short-lived trading opportunity, nevertheless, we are going to pursue it. So let's zoom in again on this chart. There we go. And let's step up to some longer time frames to consider the bigger picture in terms of what's happening. I think it's really important to always consider the bigger picture. So let's jump all the way up to a daily time frame to start our considerations. You could step all the way up to a weekly time frame if you want to, or a monthly time frame. Certainly if you're trading daily charts, you will definitely start your consideration on the monthly chart. But when you're trading a 15-minute chart, quite honestly, a monthly and a weekly chart doesn't have that much relevance to us. So we're starting here with the daily chart in terms of considering our longer time frame charts. So the daily chart indicates that a 40-week cycle trough, it's that yellow cycle, 40-week cycle trough was found in October of last year. And as a side note, you might know from the YouTube videos that I post that there is some debate about the magnitude of that cycle trough, but we're not going to get into that now. The important thing is that it was a trough of at least 40-week magnitude. And over here, we had an 80-day cycle trough. So that 80-day cycle trough occurred right over here. I think that was in the first few days of January of this year. So what is happening now? Well, you will notice we have a 20-day cycle target which is lying above us. It has not yet quite been achieved. What is price doing in terms of the signal cycle on our daily chart? It has crossed above that signal cycle, generated a target, and it is now expected to find support at the level of that FLD. Let's just zoom in. I'm scribbling all over the chart. You can't really see anything. So if we zoom in, you can see fairly clearly here price has crossed above the FLD. It's now coming down and is expected to find support on the daily chart. Okay, notice here the circle and whiskers for the 20-day cycle, which still lies a little bit ahead of us. So the important thing is we know that we are in a bit of a downtrend as price comes down into the 20-day cycle. This 20-day cycle FLD is really very close to price action, and so potentially that 5-day cycle trough that we were looking at a moment ago on the 15-minute chart, that could be synchronous, of course, with this 20-day cycle trough, and it could be just a little bit below where price is at the moment. There is nothing on the daily chart that screams, don't trade this, so I'm happy to consider trading this opportunity. As a matter of interest, it's fairly rare to look at a daily chart and say, oh, well, I'm definitely not taking any short-term trades on a 15-minute chart because of the daily analysis. The resolution simply isn't there, but it's very useful to bear that in mind, particularly as price is approaching a trough that is going to feature on the daily chart, for instance. Let's quickly have a look at the 4-hour chart, and you can see we have just crossed down below the 10-day cycle FLD. Here is our 20-day cycle FLD on the 4-hour chart. I've discussed in other videos the difference between 4-hour charts and daily charts and the subtle difference between the levels of these FLDs. You can see that this FLD is expected to provide support. And so again, on a 4-hour chart basis, we're looking fairly bearish, right? We're looking for price to come down and form this, first of all, this 10-day trough, which is potentially overdue and might even have occurred over here. And of course, lying ahead of us is this 20-day cycle trough, and we are expecting support. So the 4-hour chart warns us that it is certainly possible the price is going to come down, perhaps over the next day, which would of course be about 6 bars. So it could come down and hit this FLD somewhere over here. But it, again, isn't shouting at me, don't take any short-term trades. So let's take a look at our next chart. And this is an hourly chart. The interesting thing about the hourly chart is that we have our 10-day trough over here. As I pointed out, I think on the 4-hour chart, that seems to be fairly in sync with that. And here is the 5-day cycle trough that's still lying ahead of us. Generally speaking, this is also in a fairly bearish mode. So our hourly chart is fairly bearish. We are probably going to need to be fairly quick about this long trade if we're considering this trading opportunity on the 15-minute chart. Finally, this is the 30-minute chart, and you can see the 30-minute chart is providing us with fairly strong evidence that this one-day cycle trough might have indeed formed. You can see there is where it was expected at exactly the same time as it was expected on the 15-minute chart. There is a fairly good candidate for that trough to have formed. Of course, our trading opportunity on our 30-minute chart is an E category opportunity, so it's a different trading opportunity, but we're not thinking of trading the 30-minute chart, we're thinking of trading the 15-minute chart. So the useful thing about this when looking at the 30-minute chart is that this FLD is a bit like a magnet to price, as I've already mentioned probably many times in this series of videos. And so on the 30-minute chart, we would expect price to at least come up to the level of the signal cycle FLD. When it reaches the level of the signal cycle FLD, we would expect price to cross up above it because that FLD is providing us with an acceleration point. And so we have a short-term bullish opportunity within, I should point out, generally a fairly bearish market. And so, all things considered, I am approaching this trading opportunity with my eyes wide open, and I have identified a potential trading opportunity. I have a nest of lows for my sequence cycle, I have a potential trough, and I have an upcoming signal cycle interaction. Of course, I'm not going to trade at the level of the FLD. That would be a very bad idea, but I am going to wait for my signal. So that is the next thing that we need to do. Having identified our trading opportunity, we are going to next consider entering our trade.